All right, we're back, and I am Frankie, and this is my guest Richard, and he is with the Kirkwall Group. He's a bookkeeper. He's a long-time experienced person. He's worked with the financials. He knows how to read a financial statement. Most of us don't, if you want to tell the truth, and he can do that and help you do that. And so you guys are watching Be My Guest, and we wanted to ask Richard this question: can you tell us the difference between a bookkeeper and an accountant, so we can understand what the differences are and how we utilize each one of those services?
Well, in most cases, when people say accountant, they mean CPA, Certified Public Accountant. And a certified public accountant becomes a certified public accountant by taking a standard exam, which is multiple parts, multiple hours, and then spending a certain amount of time either in public accounting or working under another CPA. And where their experience is a lot of times is based in being able to sign off on financials as certified, being able to sign off on, um, excuse me, a review, company reviews, and signing off on audits. Now, many bookkeepers just have the experience of coming up through the ranks, working as a bookkeeper for business. And you have many bookkeepers who are limited in their experience and exposure. My background is 35 plus years in working within businesses, handling the accounting, working specifically with accounts payable and accounts receivable and payroll, and how all that flows into the financial reporting, and also doing what's called FP&A, which is financial planning and analysis, which includes budgeting, forecasting, and each month taking the financial statement, the income statement and balance sheet, and comparing them with the budget and figuring out why there are variances, what's causing them. And because of that background, we can take what the variances are, explain what's causing them, and provide that information to the business owner to say, okay, so your revenue is this amount. We had done the budget to figure it to be this X amount, and why we have shortfalls or overages. And same with a lot of the expenses, which can allow the business owner to look at his cost structure and say, okay, for this kind of job, I'm charging this amount. Maybe I should charge a little bit more, or maybe I should charge a little bit less. How does that flow into what my expectations are? I'm a certified management accountant, which is mostly working within the corporate side for most of my career, but it also includes a very strong emphasis on the FP&A and on the cost accounting. What makes up the cost structures of businesses and what their margins are and where they should be going forward, and predict them for the forecasts and the budgets.